What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a Thursday night AMC statistical and technical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCa, in Discord. With that said, let's go ahead and dive right in. AMC viewers, I must warn you that I am not feeling all the way up to par as far as health. I do have a cold. If my voice goes away, please bear with me. But let's go ahead and take a look at our analysis here. We're going to start with the immediate short-term time frame, 30-minute, and we are looking at a potential reversal of signal formation. So this is a descending channel. We are also in a falling wedge, which can also present a bullish outlook as well. However, as you can see, we're on the early stages of both the formations. If you're a regular viewer, if you're a regular listener, I tend to talk about the golden rule of three very often. So where the golden rule of three consists of three tests of the resistance within the formation that we're in after the third test, we face a capitulation event or an accumulation period for some time before an actual true breakout on test number 4. Now, as you can see within this descending channel, that we've only actually tested that resistance one time. And within the falling wedge, you can also see that we've only tested that resistance just one time. If we were looking at raw price action, I can potentially see a following test of this resistance from the falling wedge, followed by a continuation onto the downside. And we can also validate this movement within other metrics and other forms. So I just wanted to be able to give you the immediate short term. Now let's just pull up some simple moving averages and see what we have. Okay, so let's look at that very closely to see what's happening. Okay, so this is the 100-day simple moving average, and it is serving as a form of resistance. We are right at it. We do have support, however, from the 10-day simple moving average, which can actually have us come back and test this before a test of this resistance, followed by a downside continuation to test both of the support from the wedge and the support from the from the descending channel. Excuse me. Okay, so now let's go ahead and move on to the next chart to see what we have. This is actually going to be the statistical side of the analysis. So what you're looking at here is a back test that I performed by hand for us to be able to understand the movement of AMC in general from its genesis. I'm talking about from the first day of trading, which was back in 2014, all the way to where we are today. These metrics are taken by hand. So for the new listeners, for the new viewers, you are looking at volatility here, represented by this indicator, BBWP. Now, volatility is direction neutral. In order for us to gain a bias in direction, we pair it with a momentum oscillator or a momentum indicator in general. This is a stochastic momentum indicator. You can actually see the title right over here. And it is proprietary to TradingView software, which is what I'm trading on right now. Okay, so the metrics for us to get a statistical outlook or a statistical mean based on the entire trading history, it has to meet this criteria. So we're actually taking the upside thrust versus the duration of the particular iteration, and we also took the instances or the iterations from which the volatility versus momentum profile guessed the upside correctly, which is why you see red and green lines. Now, within the volatility, what I consider to be extreme volatility buildup is anything below this 15 percentile. So anything from the 15 percentile and lower is critical volatility. An incoming move is likely to be met after an expansion phase commencement from build up down here. And it's also the same from the upper areas too. When we're fully expanded and starting to print these bars, or the longer we stay above the 90 percentile, which I consider to be critical expansion or critical volatility, we start to contract to the downside, and the stochastic momentum will give us a bias in that direction. So Now, before the read of those metrics, the statistical variances, I want to touch bases since we're on the daily chart here. We are looking at the daily chart, and we can see that we're within a descending channel as well. Now, a lot of people were calling for us to continue up to the upside here, but as you can see, and if you can remember the golden rule of three, we've actually only touched or tested that resistance from this channel one time. And that one test was in August 2022. You can see the dates right below. This would be test number 2. Now, test number 2, of course, rejected that resistance line and came down to the downside. Now, there is the statistical metric here for us to look at. Based on a total 46 iterations, we have 26 correct that were guessed to the upside. The averaged upside accuracy is now 56.52% with an averaged upside thrust of 44.31%. And this is likely what happened with this move right over here. The reason why I'm taking metrics of this is because we are about to take the backtest for another type of metric. This is for us to understand the ups and the downs of AMC movement. Okay, so let's go ahead and take a ruler from the firing off of the signal, which could be right at about here. Let's see. Yeah, so we're going to take it from right at this candle here, and we'll, you know what, we'll take it from the low of that candle and just measure to the upside what we got. So now based on the high, or actually let's do it to the closure of the candle, right? So the closure of the highest candle we have here is that red candle. We have a move of 48.91% to the upside based on the firing of the signal, where we started an expansion phase to the upside. And the statistical metric was suggesting for us to make a move of 44.31% to the upside. So this is pretty close to that. So that upside statistical metric has been realized. And I will have to now update this to be 27 out of 47 iterations correct. So the metrics are going to change just a little bit. But that's not the point of this analysis. The point of this analysis is that now you can see that this line here, I'm going to go ahead and draw the 90 percentile, which is right about here. We're going to draw a trend line. And you can see that we're now starting to approach the critical zones of a high volatility buildup. So, and also you can see that the stochastic momentum is peaking. We still have room to go up, but however, that pivot is starting to change just a bit. As you can see here, the volatility component of BBWP, which is this spectrum line, is starting to change its posture as well. So this is likely to continue just like this, followed by a buildup of volatility and then make its contraction phase. Similarly to what happened down here, it started its expansion phase from a critical low. So what I'm saying is that there's a potential for us to continue to the upside just a little bit more before us finding a critical downside move. And that critical downside move can actually be verified with the back test that I will be performing, similarly to this upside test. Okay, so I should be doing that tonight or the following day, but we'll be looking at a potential move to the upside first before a capitulation event likely to test relevant supports starting from the not 618, which could be at about $6.42. $6.42 has a lot of rhyming within it. It's actually the resistance or the support from all of these channels, all of these candles right down here. And then we can also consider continuing on to the downside, but usually test number 2 is not that big of a capitulation event test. So we can actually see a test to likely within this range down here, and before us trying to test number 3. Number 3 test usually presents the bigger capitulation event for us to test the lower side of the channel, which would be the support, before us making an attempt to truly break out on test number 4. So this is how I trade. Please know that I'm not a financial advisor. I can't actually suggest for you to buy or sell any assets. Take whatever I do say within these videos as a form of entertainment. Do your own DD and we'll be okay. All right, so this is the way I test. I test based on statistical metrics or statistical volatility or historical volatility versus momentum. And this is literally, I probably won't take the trade unless I do have a back test like this. Okay, so now the last chart we're looking at is very much in confluence to what or in accordance to what we're talking about for a downside event. My apologies. Okay, so we are looking at 1, 2, 3, and 4 primary drives of 12-hour hidden bearish divergence for the RSI. And you can see that is likely in play now. And the 12-hour RSI is suggesting a continuation onto the downside. I have made a drawing for the new, let me just go ahead and bring it up for you guys. For the new viewers, I have made a drawing of the RSI so that you can be able to follow along. So this is my RSI property so that you can understand what I'm talking about, okay? So let's open up a multi-pane and look at several time frames at once so we can gain an overall bias and direction, starting with the immediate short-term time frame, which could be the 30-minute. Okay, so the 30-minute is suggesting a downside continuation. As you can see, it's a very small pivot towards the downside. However, we are within the shallow areas of the bull weakness percentile. This is likely to be gravitated right into the weakness area of the bears, and we can likely see some sideways trading. Now let's move on to the bi-hourly. Bi-hourly RSI is also within the shallow areas of the bear weakness percentile, the bull weakness percentile, excuse me. And this can likely present some sideways trading as well. The moving average is giving us a hint for a possibility to continue on to the downside. And as you can see, we have actually been using the moving average, which is this pink line, and the RSI signal is this purple. We have actually been using it as a form of resistance on the way down, or a guide to the way down, if you will. So now let's move on to the 6-hour. 6-hour RSI is also suggesting a downside continuation. However, the downside continuation is well within the deep areas of the bull weakness percentile, which means that we can be likely gravitated towards the upside before finding resistance from the moving average right above us. Okay, so this is in accordance to where we're talking about of a short-term move to the upside to test either this the resistance of the wedge, or testing the resistance of our descending larger time frame channel, which is this descending channel right up here, which is at about $7.92, if we were to put it, $7.80, right around there. So this area right here is suggesting a test of about $7.46. So we do have a range from $7.46 to $7.80 as a form of resistance. And alongside that, you can see that the 50-day moving average right here, the simple moving average, is sitting at about $7.55. If we do open up some EMAs, we can possibly see something else. Okay, so we do have support from the EMA 7 and also the 7-day simple moving average, which can serve as a point of support before us continuing on to the upside and testing these areas of resistance that we're talking about in the last chart. So now for the last time frame, this is going to be the daily chart, and the daily chart is absolutely suggesting a downside continuation. It has now failed the bull strength percentile and now has entered bull weakness and continuing on to the downside with a pretty significant downside thrust. So if I were to just put a discretionary type of guess, I would say that we can look at some potential upside or corrective move before a pullback towards maybe mid-session or late tomorrow. But yes, I don't think that there's a room for entry just yet, unless we can actually verify that we do make this form of resistance, we actually test it as resistance and fail it, or succeed the resistance and continue on to the way down, in which could be a pretty good long put play or a short position play for a short term deal. Nothing long. It could just be a couple days, a few days. But with that said, I think this is a pretty good place to leave the video. And if you have any questions, please don't hesitate to reach out to me. I am on Discord. I am on Twitter. I'll make sure to leave the descriptions, the links in the description down below, excuse me. And for you to consider joining the ARCa trading community in Discord. But with that said, you have a good night, and I will catch you at the bell mañana. Adios.